Non-farm payrolls can be notoriously violent and extremely difficult to trade, number one. So my first rule on non-farm payrolls is that I don't want to lose, I don't want to take a trade that's going to run me over in just a couple of seconds. So I've seen non-farm payrolls where we gap like this, roll over, go all the way down, and break prior day's lows. I've seen non-farm payrolls like this where we open up and we run all day. But most importantly, the ranges tend to be extremely wide. And so what I want to push for when I'm looking for trades today is even if I'm aggressive, right, I want a 8 or 9 point push before I'm looking for a trade, and preferably, and I would dare say even a 15 point move before looking for a counter rotation. I would definitely be looking at the 1 minute chart for tick divergences trades. And I'd be cognizant a lot of shorts are going to be trapped. The question is, were they trapped pre-market and hence we got this big push up, or are they going to be having their hands forced in and push us all the way up to the highs, which would be up at 1810 or 1810 up to 1812.50, I believe, is the high area. So for me today, the critical area where I put the white zone was in that 1789 to 1792. It's 3 points wide, okay? And it when we're in that white zone, you got to add in consideration if your stop is normally 2 points behind the zone, right? You're talking about a 5 point trade. So look carefully where you're placing that trade. It's not worth it to place that trade if you know it has to withstand that entire push, or if you want to maintain your tight stops, right? You're just going to have to hope that it pushes all the way to the back of the zone. There's no easy way to do non-farm payrolls, and I can't stress that enough, that accounts get blown out on days like today because the moves are so violent. And I most likely will not be trading the first half hour at all, whether I think I have a setup or not. I've simply been blown out too quickly on too many trades, and we've got to remember our general overall strategy, right? Is we're looking to trade concentrated positions, and our primary targets are approximately 2 points, right, with trailers. It doesn't help me on a day where we've already had from the overnight session low near 1784, right? We've already traded a 20 point range. It doesn't do me any good to try to put on a large amount of risk today when I know that my range is already, let's call it 1.5 times to 2 times the normal range, right? Because if I get blown out on today, when I know that Monday or Tuesday we'll have normal ranges with good setups just like yesterday, right? So there's 2 ways to handle this. You can choose not to trade. You can choose to wait till after the first 2 hours. It tends to settle down and become pretty tradable, where the normal ranges tend to recoup, right? But the first hour is definitely going to be the most difficult. So I think I put enough caveats and stars there to protect everyone from getting run over. So let's go and look at the volume profile first of all, because we're going to have a lot of thin air. So let me pull that up. Okay, so yesterday was a balance day. We're clearly moving out of balance. The tick will be nailed when we open. We're probably going to open with a positive 1,000 or 1,200 tick would be my what I would suspect. If we're going to have a trend day up, 0 tick tends to be a fantastic entry to the long side. If and when we get it, depends on how long it takes to get in there. But generally speaking, 0 tick is a very good entry, and I'll show you what that'll look like in just a second. And I'll probably push a little bit into the open because I'm not intending to trade the open today. So I just want to take my time and make sure that everyone gets the details correct and we get set up to have a successful day instead of rush through it and end up, well, not achieving what we want to achieve, which is making money. So let's take a look at the daily profile first. We're currently trading. You can't see my blotter. Hold on one second here. Annotate. Okay, we are currently trading roughly at a high of 1800. Let's call it 1804, which puts us right here. Okay, right in front of, on the daily chart, this high volume node from a few days ago. We've also cleared above this 1800, this 1799. So when we come back to the downside, right, this 1798 area to 1800, and we're at, we're actually gapping above the open gap that's sitting right here. Okay, that'll be our first test if we hold or not. I just don't know if we will actually be able to hold that move down, right? It could actually be quite violent and simply reverse and push back up is one scenario, right? We can open right on it and get underneath. My suspicion is if we can't get back above this very quickly, sellers will come in and could actually push us back to the downside, right? So if we get pushed back to the downside, this 1790, 1789 area from yesterday proved pretty stout in the afternoon. And prior to that, I believe it was 1790, I want to call it 1792, right? So somewhere in this area is a possibility to get responsive buyers. But the key to this entire morning is going to be staying above that 1800 level. If we fail to stay above 1800, there is a lot of space in here that was poorly auctioned this morning because we gapped through it, that we can come back up and fill in, really all the way down to here. Okay, so let's go look at, so that's one possible scenario that we have. Again, I'm not fading it or buying it in the first half hour. I want to let the other players expose their hands and then let myself come in where I have a trade where I have a relatively easy setup, where I have possibly tick divergence, because all I want is one or two trades. Oh, hold on one sec. There's no audio. Okay. So is everyone else getting audio? Can everyone else hear me okay? Give me 1 second, guys. Okay. Connect via internet. Okay. So good. Everyone else can hear me okay, so I'm just going to keep going. I sent out instructions. So let's look at the 24-hour chart here real quick. Here we go. Let us trash all this. Okay. So we can see on the 24 hours, right? Extremely thinly auctioned, right? You can't see my note. Okay. Extremely thinly auctioned through here, right? So the first areas on the 24-hour that we have, let's expand this up a little bit. Okay. And then let's annotate this. This area right here that we ran right into resistance. Okay, so to get on the upside, right, our first test is going to be this 1805, 1807 area, right? But if we can get above that area, we have a small, very weak bit of resistance right there. And then we have, this is it really. If we get above that 1810 and hold, there's 1812.50 will be a psychological resistance point, but there's nothing there in terms of profile or size to keep us from busting through, right? So considering that we have a range already of 20 points, right? And we can normally have a range intraday of 12 points. So the question becomes, where can we go from here, right? What are the possibilities? So the first thing I want to look at is what would be a good rotation up. So obviously this becomes a target right here, the old highs, right? That's possibly one target, and the way that that would look trade-wise, and again, the scenarios are going to be very difficult to run through this morning in an easy fashion, right? So we know that we're going to gap, and initially my guess is those people that are short, retail clients that are short, that came in overnight, my guess is they're going to be forced to cover, right? So what am I going to key off of there this morning? Well, I'm going to key off the same things that have been strong every day. The NASDAQ has been incredibly strong every morning and has led. I want to watch how the NASDAQ is going to run. So if we're opening right here, let's call it 1802, okay? So this is our open point, right? This area right here, this first move in will be our first test as to whether we're going to find responsive sellers or not, right? If we can get above the responsive sellers, 1807 to 1809, before we rolled over, this area right here provided stout resistance, and we were unable to get over it. Even when the NASDAQ was pushing new highs, 1807 to 1809 held the market. And really, if we get above 1809 and hold, I would not want to look to the short side, probably for the balance of the day, unless we can get back below 1807, or unless we get up to the 1820, 23 area. I want it really, really stretched until I'm sure out of control buying is completed, right? So on the downside, let's say we open up. Our first key test on the open will be the 1799, 1797 area. If you recall, when we were trading in the 1800s, we had dipped down twice, where we basically came into this 1798 area, and we rejected off both times. If you go and scroll to the left here and go back about 2 weeks, you'll see that we rejected there. For the upside scenario on the first push down to being intact, right, we'll have to hold the 1798, and we have to get back above the 1803, essentially 1804 area, right? And then we have to get through this penetration. So you can see, if you recall when we were trading in here, and let me see if I can just pull up a quick chart so that we can all see that pretty easily. And guys, just so you know, I am going to run into the open. I'm just not in a rush this morning. They tend to be very hard. So I'm going to stay on the open. If those of y'all have to drop off, I totally understand. Just 1 second. Okay, let's go to a 15-minute time frame. Okay, and then if we scroll back here, scroll back a little too much. Okay, here we are. So if you recall, this is the area right through here, right, where we found responsive buyers each time. As a matter of fact, after we gapped down, and we just opened up here, so after we gapped down, we were actually unable to penetrate through this area. So again, on the downside, that's going to become the key first test, right? You can see where it's rejected. If we can hold above this area, right, the other area you see where we're having consistent problems, prior to this one move where we kind of came up and failed, right, was this 1707 to 1709. You can see it, obviously not very detailed, but right through here, okay? Those are our first two big test areas. If we get below this, right, you'll essentially, what the market will have said, and we can't get back above, what the market will have said is all the shorts covered prior to the open, and aggressive longs who took the long right out of the gate, right, have now been trapped, and we then push down. If you recall, one of the scenarios that I had suggested, bigger term, when we were looking at the market profiles on the 24-hour basis, so look at that, was that I had suggested that we have an extended range, right? And that extended range would look like this, from that 1800 down to approximately 1770, which puts us right down here. Right, that would be an extended range. And obviously this 1775, this whole area right here, looking like would be a zone where we'd want to attempt to get long down in this area, and that these areas above here, right, would cap the upside. So we have had examples on the downside, right, where we had long liquidation moves, and it looked like the market was going to really roll over, and then we just rotated and came up and pushed new highs. We can have that exact same scenario where it looks like on the day, wow, we're going to break up, it's going to push right up, right, and then fails. All we're doing right now is trading to the top end of this balance area, right, the larger balance picture, correct? And so it looks exciting. We're gapping 18 points, right, but we don't know that we're actually breaking out. And in this entire area, right, you can see how the profiles look. Look how much chop takes place between 1805 and 1810. Was a pretty difficult place to get a clean trade in. 1807 proved a good location repeatedly when we were in this area, and 1798 provided good location repeatedly in this area. Everything else was really pretty tough for us, right? So the market has pretty good memory, and there's a lot of volume to run through here, right? There's a lot of people that were stuck long when the market rolled over. And normally what happens is when we push up into an area like this, those people that were stuck and took a rollover all the way down for 20 some odd points, right? 30 points, they're going to be like, thank you, Lord, for giving me the opportunity to get out. And they're going to use that opportunity to sell. The question is, once they've sold their supply, right, are buyers aggressive enough, right, to push through that supply and push us up over that 1810 level? We get over this 1810 and this low volume node that's sitting right there at 1810, there's not a lot keeping us from pushing up into the 1816 and then 1822, 1824 area, somewhere up in here. And those are projected extensions. On the downside, let's look at that scenario here real quick, right? If we look at the downside, all of this is from today, right? It's fairly heavily auctioned. This is the key area on the downside for the day. This area needs to hold, right? Below that, you'll notice we don't have anything that really stands out in the profile that makes me go, wow, this should hold, right? 1785 obviously is an area of interest, and we have an uptrend in here, all right? And we had this downtrend broken that was right here. Okay, so when I see this as well, right, the other scenario is, and it would actually be the preferable scenario for a long, right? So it's unlikely we could trade to the downside, but it's unlikely that we roll all the way over. It could happen, right? But even if we do get into that process of rolling over, right, it would be possible or even probable, right? If we roll to the downside, we could get a backside rejection of this downtrend line, right? Or we can get a test of this uptrend line right here, right? Either one would set them up for a potential bounce back into that 1798 for another test. And the reason why we're using such large ranges is because we're having an enormous pre-market range, right? So we have to consider that this could really stretch far and wide. The other thing that I want to stress, this isn't our normal day, and it's not where we consistently make money. So I don't want to push overly hard to try to find a trade. I want to let the market settle. And then once the market settles, I can make my money easily. I don't want to dig a hole early in the day. So let's go look at, while we're doing this, right, let's look at our chart right here. And let's go to I want it to be, no, it is not. 1 second. Here we go. Okay, this is what I was looking for. Okay, so this is our ES right here. On a, it's not updating. 1 second, we'll fix that. Okay, so obviously there's a huge gap here, right? So the first thing I want to figure out is approximately where's half gap. If we could even remotely get that, right? That's the other thing I want to look at. So I'm going to pull my fibs. This was the approximate close. Half back comes in at 1793.5, and the 62.8 retrace comes out at 1791.25. That's definitely an area for us to expect responsive buyers the first time in, and it would have us almost with a 10-point stretch, right? I'm not saying that we'll get it, but if that were the scenario, right, it would look like this. So we've opened up here, right? As you can see, we're pushing down. We could push down into this area, okay, find responsive buyers, get a nice 5 or 6 point push back up into 1798, right? And then this becomes the test once again, right? They have to get it through 1798 to maintain the upside momentum, okay? Obviously, if we fail below half gap, right, gap fill would be an enormous move back to the downside. But remember the other day, here, we pushed up for almost 15 points to the high, and then we rolled over almost 23 points from the high, right? 1798, all the way down to 1777, I believe was the low. That's a huge 20-point move, right? And then what did we do? We came back and we pushed all the way back up in the afternoon. So that's why I'm stressing on this day is this exact move. There's no reason why we can't have 15 and 20-point moves today, given the size of the rotation, right? So remember when it was falling apart here, right? We came into extremes, and we had a tick extreme at the low, but we did not get tick divergence. At the top, we did get tick divergence on that particular day. So tick extreme followed by tick divergence would be the best, but keep in mind that if we're rolling either direction really hard, those tick divergences can get run over on exceptional days. So the other scenario, right, obviously is we come in here into the 1798 area, we reject up, and then we just slow grind up all day up into this 1810, 1812 area. So one other thing I want to look at. Okay, can everyone hear me now? Test. Okay, great. Okay, so going on, let's look at the 24-hour here real quick. And let's turn this into a tick chart. It'll be much easier to see. Let's go with a 1500 tick. Okay, and again, you'll see we're pushing down to this 1800, 1798. They're coming in and testing that area. Again, I just don't have any interest, and I don't mean to sound uninterested. I want to reiterate. The reason people get excited about these days is because if you trade one contract or two contracts or what most books would consider, reasonable risk, right? Where you're trading one or two contracts on a small account, even if you have a large account, you're trading 5 contracts or 7 contracts, right? The prospect of having a 20 or 30-point day is incredibly exciting, right? You're thinking, oh, I can have this huge move. But for our focus, once again, what we do is we do much better in a controlled, smaller environment, right? But with larger size, where we have a very high rate of assurance over a series of 10 trades that we make a lot of money, which is exactly why I don't get excited about trading days like today. So let's take a look at this real quick. Okay, this is that downtrend line that that's been holding us this entire time. Let me get my annotation out again. Okay, so that again will bring us into that 1792 and area for a backside test, right? The other thing that I'm noticing right here immediately is I see that we have, so we're going to have to get above this downtrend line, right? And even if we get above it, what I'd want to see is on this a backside test. If we break, right, and see if I couldn't get a long rolling over. Right now, I see no reason to step in. As a matter of fact, this channel, right, is actually starting to push us down to a certain degree. And we're hitting a series on the bars closing, right? Slightly lower highs and lower lows is the first thing that I notice, right? So I see that right there as a small wedge, and it'll be interesting to see if we can break back up to the upside here. Again, there's no damage done until we get below this 1798 area right now, right? And I believe we said half gap, right? Put us in the 1792 area. So we have time and we can afford to wait without sticking our foot into a landmine either way. the other thing that I'm looking at, right, is starting from yesterday afternoon, is this uptrend right here. Okay, again, 1792 looks better and better to me. 1790-92 area, while this isn't a perfect trend line here, is looking more and more attractive on the downside, right? But that's only if we get below 1798 clearly, right? So this will be my first area where I'm really interested. I want to take a look at NQ real quick and what it's doing this morning. So let's get a 500 tick bar and 24 hour. Okay, let's trash this. And then let's take a look at this right here. First thing I see there, and then we have this coming into the open here. So we know quite clearly what has to be gotten, where we have to get above, right, in order to make this trade work to the upside. And then half gap on, let's do this. Half gap, we closed approximately, I want to call it right here, right near Glovex lows. So if we pull all the way up to our highs, approximately 34.98, which is actually pretty interesting because that puts us right into the top of structure right here, which we have this huge structure area right here, right? So that would be a perfect place to find responsive buyers if we get down there. Now, if we get up underneath this area, right, we still have this trend line from the prior day down at 34.90, and that 34.90 has been pretty key. You can see here we had this downtrend line that had been broken, or they attempted to break late in the afternoon, right? Okay, and you see that had been broken, but that had all keyed off of this 34.90, right, to 34.95 had become very important. If we scroll back a little bit, and I'll show you that here real quick. So let's do this quickly. Okay, you can see how we worked into this 34.90 area prior, was a key area, and it also became key resistance, right? When we were right before we broke down. So this 34.90 on the backside test will probably be pretty nice long trade if we can get it. Right now we're not there, but you also notice we're not ripping to the upside. So I'm going to be really patient this morning. I'll let y'all know where I see a trade. I hope this set up for y'all pretty well. Again, not trying to do too much this morning. I'll let everyone else get excited. I get excited about days like yesterday where we just, we nailed the zones left and right. It's relatively easy to control my risk, and I don't get crushed on the downside. So I'll leave it open for questions if anyone has any questions real quick. We can take a look. I'm just going to switch back over to the to today's chart. And so far we've come right into Wednesday's highs and held so far. It'll be interesting to see if we can hold this or if we roll over. And really, if you look at the open right now, we have a potential open drive down, right? We've opened at the high, we tested the high, and we've moved straight down from there. And then let's take a look real quick at the tick. Let's see this copy window. And just to tell you all how committed I am not to trading this open, I don't even have I'm in demo mode. I want no desire to click this button this morning or to click into these trades whatsoever. I just after 9 o'clock I'll switch over to my regular trading account, but no desire to even get tempted into taking a trade. that, if we look so far, right, this has actually been quite difficult. We've had a flush down. The buyers who've bought in, we're a good 15 minutes in. The rotations back to the upside have been very small to this point, right? This is where we're at. And then we're going to insert symbol tick plot. Okay. You can see we're just now getting to the 0 tick. So 0 tick tends to be a low risk entry area. I would have preferred that it came after 9 a.m. As it is, we're getting it prior to 9, so I'm just going to kind of sit tight and see what happens. Again, fading it was a little too obvious. I didn't want to get rushed to the upside, and buying it here with a small rotation after such a big up move is too aggressive for me. So the white zone is an area I'm definitely shooting for today, and I'll feel very comfortable if we can get down into that area. This is the big test right here at 1798.50. Has to hold. The problem is I'm not willing to throw out 2 points quickly if I'm wrong and begin to hold prior to 9 a.m. at this point. It's just not a normal opening. If we look at this on a 1 minute bar, and as you can see, we've exceeded past the 0 line. And if you'll recall, guys, in our coaching sessions, right, we've shown on strong days up, right, we've simply kept pushing and pushing. Hold on, give me just 1 second. Okay, great. So let's switch this over really quickly to a 1 minute bar. Okay. So we can see to this point, this has been just a straight downtrend since the open at this point. We're also trending down on the tick. We did open at that positive 1,000 tick. And again, that goes back to something I've been talking to you a lot about, which is when we open at these tick extremes, right? Sometimes we open a tick extreme and we shoot straight up, but there's other times where we open tick extreme, it holds this whole area, and even while the tick is grinding down, price grinds up, right? And so it's not an easy read when we have tick extreme, and it's best to let it come in and see what's happening. At this point, we're actually trending down on from tick extreme, and if we hit new highs, it'll almost certainly be on divergence. I'll be cautious with the first divergence since we opened so high. I really want the second divergence if it sets up, right? In other words, this tick extreme is so high that even if we come up and set a new high up here, right, it's almost certainly going to be a tick divergence. Even if we hit an 800 positive tick, right, it'll be on tick divergence, right? So I want to skip that, and I want to see really a third divergence. So it would look like this if I was looking for it, right? So we come back up, right? The market could come back up, come into a new high, right? And it would look, without knowing, like we're having tick divergence there, right? Well, let me get rid of that. But what I'd really want is for us to come up, hit a new high, look like there's tick divergence, come back in and hit a new high again, maybe the back of the zone, maybe higher, right? And then this time have the tick divergence like this so that I actually have an actual divergence here that I can measure versus off this 1,000 tick. Makes it very, very difficult. Right now, I'm actually quite happy that I'm not in any position whatsoever because this just does not look easy. It looks like people are waiting for the snap back up, and you would think they're going to get it, but again, we want big fat rotation. So right now, 1803-ish, 1802 and a half looks like our first, looks like our high so far, right? So 1792, right, gives me my first 10-point rotation. The back of that zone, 1789, gives me a, 13-point rotation. So a lot of things are lining up right in this area that make it very attractive to me, all right? I'm not sure that we'll get it. And then I would also look, if we get a retest here, right? If we one tick this high and then reject, that would be a possible sign that a high has been put in. So anyways, I hope this was helpful, guys. I'm in pretty laid back mode. It's cold as hell here. And I just want to watch what's going on. I'll update over Twitter. Unless anyone has a question, I'm open to getting hit with a question right now because I'm not doing anything for at least another 8 minutes. Okay, looks like no one has any questions. Have a great day, guys. And y'all can hit me on Skype or on Twitter. I hope this helped y'all out. Talk to y'all later.